What's up, everybody? Happy Monday. I'm feeling very relaxed today. Feeling very relaxed. All right, what happened? We had the durable goods orders came out a little while ago. Negative, down 0.2%. Ex transportation, headline number up 1.8%. That was in line with expectations, but the ex transportation, they were looking for an up 0.5. We got a negative 0.2. And last month, we got a positive 0.9. So big reversal there. So, listen, I'm working on finishing up this week's issue of MMT Trader. That will be out later today. All right, so all of you who are on the email list, you will get it. If you are not on the email list, and if you want to get it, go to my website, pitbulleconomics.com, and right there on the homepage, you'll see sign up, get me the 30-day free trial. Get the 30-day free trial. In the meantime, you can check out all the back issues, which once you sign up for that, you can get all the back issues, okay? I feel very relaxed today. There's this theme developing now, I think. And this theme is, the Fed's not going to be able to raise rates. Yields are coming back down again. You see the yields crashing in Germany. Bond markets are rallying. There's a flight to quality. People are starting to question this whole growth boom. Now that might be something, all right? But the stagflation thing, in my opinion, has not gone away. And here's the thing: the Fed rate hikes have set a permanently higher. Permanently for now as a result of policy, but has established, those rate hikes have established a higher price plateau, okay? We only got 2 rate hikes, but you saw the reaction. You saw the reaction in gold. You saw the reaction in inflation indices, not just here in the United States, but everywhere. We got last week the Canadian, we got the German inflation, we got EU inflation everywhere. You're seeing it. You're seeing it everywhere. So the Fed rate hikes, as I have been saying, as I've always said, rate hikes are inflationary. A lot of people here say, Mike Norman, he doesn't know what he's talking about. Rate hikes cure inflation. They don't. They're price increases. Okay? See gold. I said all the way back in December 2015, when the Fed turns around and starts hiking rates, you got to buy gold. Boom, gold went up. Same thing last December. Buy gold right at the rate hike. Boom, it went up. It's not going away. The Fed has established a higher price level. Everything reflects off of that. It's going to keep going higher. As a result, I do think this flight to bonds, it's a fake out. This is a fake out. I'm still selling bonds on rallies. I am still selling the dollar. Yes, that's right. Rate hikes are bearish for the dollar, folks. They're bearish for currencies. Just like rate cuts are bullish. That's why the dollar went up for 8-9 years when the Fed was bringing rates down to zero. And all the nut jobs out there and all the fools and all the inflationistas and all the zombies, they got that wrong. I got it right. I talked about that in 2009. I said there's going to be a long-term rally in the dollar. Now I'm saying it's over. It is over. Okay, I'm still selling rallies in the dollar. I'm still selling rallies in bonds. I don't care what everybody else is doing. They're all wrong. They're jumping into bonds now. They're thinking, it's all over. No, it's not all over. Fed has set a higher price level, and it's not taking that away. They're not going to start cutting rates, believe me. The inflation's going to accelerate. That's why you see gold acting the way it's acting. Yes, gold is an inflation hedge. Yeah, how about that, huh? I bet you forgot about that. All those idiots who were talking about hyperinflation when they were cutting rates to zero because they didn't understand anything, then they suddenly say, well, it's not an inflation hedge. It's a currency. No, it's an inflation hedge, and that's why it's going up. All right, it's going to keep going up. It's going to keep going up. Nobody's in the gold market. If you look at open interest on the part of speculators, nothing. So there's that. So nothing has changed as far as I could see. Yes, the growth outlook, that is questionable. Especially if you look at stocks and what they are anticipating or expecting in terms of fiscal stimulus. You know me, I'm skeptical about that. I mean, Trump has surrounded himself with big-time fiscal hawks. Now, I will say this one thing. The fiscal flows have flipped back around to positive. I am telling you that, and that perhaps undercuts my view a little bit. But they're not, strongly positive, and they went positive last week because we had a very, very big turnaround. The IRS finally released those tax refunds. We had something like a 60 or $70 billion week last week in tax refunds going out. That's big time, man. That is big time. And so that put tax refunds now $3 billion ahead of last year. So we were down like $40 billion. Now they're ahead by $3 billion. So, that's something to pay attention to. The flows are of utmost importance, and I do look at that. We are not big time, big year over year, but we are positive now. So that's something. But we're coming into March. You know what happens? By March 15th, they got to raise the debt ceiling. We need a new budget agreement. So a lot of stuff can happen in March. A lot of stuff. And again, the guy, Trump, he's got a whole bunch of fiscal hawks in there. This Mickey Mulvaney, oh, brother, this guy. I mean, this guy's like, he's unbelievable. This guy wants to cut and slash everything, man. So we'll see what happens. Anyway, get the report, pitbulleconomics.com. I probably won't be doing too many videos today, just one later on today when the report is done. Everything's going to be in there. All my analysis is going to be in there, right? Never had one losing trade. Every single closed out trade has been a profit. All my analysis is going to be there. So get the report, pitbulleconomics.com. See you guys later. Bye-bye.